Veena, welcome to the show today.
Hi, Michael. Thank you so much for having me. I'm so excited.
I'm so excited. It's been a long time. I don't know why it's taking us for this long to get you on the show, but podcast is a great way to catch up, and that's what we want to do. So give us a little background on yourself and kind of what brought you to this point.
Yeah, so I have rolled out a company called Vive Funds. I, rolled it out mid-COVID because that was really the best time to make a drastic life change, was right in the middle of a global pandemic. But it served us really well. We've bought over $250 million worth of assets in the Atlanta market. And we focus on Class B value add multifamily in Texas, Florida, Georgia, North Carolina, South Carolina, and Arizona.
Also Hawaii and Alaska. Yeah. You guys are in you guys are in a few markets. Yeah, that's pretty cool. Well, how did you get started with this stuff? I mean, obviously you've been doing this for a little while, but how did you get into it?
Yeah. So I took the shortcut and I totally cheated because my mom is a very successful real estate investor. So I grew up in this world. I have been around it my whole entire life. Probably before I could even walk, I was at closings and touring assets. So
that's cool. It strikes me when I read the Donald Trump book, The Art of the Deal. He also grew up with a family. His dad was a real estate investor, but and so that gave him a leg up, of course. But the man thought at a much higher level than his father did. Are you thinking at a higher level than your parents as well?
I don't know if I would say that. My mom is a very smart person. I've learned a lot from her. I think the difference is they were immigrants to this country. They came here with nothing. They came here with no credit, no safety net. Whereas I had a lot of latitude to take on significant risk that I was like, all right, well, if I lose everything, we'll move back home or my parents will pay the mortgage. I had a pretty big safety net to be able to take on more significant risks. So I think I just can look at scale a little bit different. And, my kids, I want them to be able to take on even more risk than I could because they don't have to worry about what happens if they fail.
Well, let me challenge you about that because I have a few friends who came from parents from immigrants and I see the opposite where the parent was, the entrepreneur and they, came with, $2 in their pocket and worked their butt off and, sweat, grit. And then of course became very successful and they don't want their children to have that kind of life. They're like, oh, I want them to have a better life. Just like that with that, that's like that. And sometimes of course, money corrupts, right? It makes you lazy. And what is giving you the drive to, do what you're doing?
Yeah. So my parents are totally that immigrant story. We had to hear every week at the dinner table about how they came with $26 in their pocket and everything is self-made. And they walked both ways uphill in a foot of snow in India to school.
Of course.
Barefoot. So we grew up with that too. And, they understood the power of leverage and they understood the power of making smart investment decisions, which I think really gave me a foundation. As far as money corrupting, my parents never indulged us. We always were taught a very solid work ethic from a young age. And my parents always made it a point to show us that not everybody lives the life that we live. Even in middle-class America, not everybody lives this life. And so they were always very purposeful in instilling those values and those messages in us. And, I'm trying to do the same with my daughters too.
Yeah, it's tough. I mean, I have 4 kids as well. And, and you try to do what's best for your kids. And sometimes you're like, you just want to do it for them. You just want to buy it for them, Yeah. And it's tough, right? Because you want to spoil your kids, but then again, you don't.
Yeah, no, I mean, you're exactly right. And, also now I'm in a point where I'm like, I don't want to do certain things that aren't nicer. So by nature, they're my kids. I can't leave them behind. I can't put them, they're 2.5. I can't put them in coach and flying business class. Right. So I'm I'm trying to figure out that balance and that struggle is real.
Well, I think the work ethic is super important. I think that's the common thread of anyone who's successful, real estate or otherwise, is the work ethic. And I think that's so important. How do we instill that in our kids? And your parents pulled it off with you in some way. And, so that's pretty cool. And now you guys, so how many units do you guys, what is the size of your portfolio right now?
So we've transacted on my total portfolio just over 600 million. So somewhere north of 3,000 units.
Yeah. That's pretty cool. Give us a sense for the team. Like what's the makeup of the team? Because it's probably not just you at this point.
Yeah, no, it's not. I wish I could take all the credit for what we've done, but I really would be doing a disservice to our awesome teams that are doing everything behind the scenes. So at the partnership level, it's myself, and actually my sister is a partner in our company too. So she's also followed the footsteps of my mom. And then we have our third party teams, which are also really critical. And I don't know that we'll ever pull them on board internally. It probably doesn't really make a lot of sense, but that's like our tax strategist, our attorneys, our securities attorney, very, very, very important. We utilize those teams pretty heavily. We have our administrative coordinator, we have our asset managers, we have underwriters. So our team is fairly extensive at this point. We have someone that kind of heads up each little section, and then we focus more on the higher level and the strategic piece of the business at this point.
Well, let's talk about that, because, as we scale, we're always asking the questions, how should we spend our time, right, Garrett? I mean, the three partners are like, should we be in the weeds? Sometimes we need to be in the weeds, but we really want to be more on the strategy level. So you guys have actually put a lot of teams in place to handle some of these things. So how do you and the partners spend their time? What is the most valuable way you can spend your time right now?
For me, it's on strategy around acquisitions or capital and legal structure. Those are, I think, the big three. I spend a lot of time in those because I enjoy those the most, if I'm being totally honest. Like, those are my favorite parts of the business. I do still take a lot of investor facing calls. All my investors, like, they have my cell phone number, they text me, they call me, and it's hard to scale with that, but it's something that I think has really been important to our business.
So, Veena, from what I know about you, you've really kind of gone to the highest level as far as capital raising goes. And not a lot of people get to the level that you've been able to achieve. What do you attribute to that? And what do you think is really the makeup of your reason for going to that level? Because I know there's a ton of people listening that are like, man, if only I could raise, more money. You've figured something out.
Yeah. So I hope I'm not at the highest level, because that means that I'm like just done. I can just walk away right now.
Grant Cardone is at the highest level. Okay. I want to be Grant when I grow up.
Yeah, he's definitely raising capital. Well, and he's switched to like a Reg A raise now. So he's taking in smaller investors, and he's really catering to people that wouldn't otherwise have access to these opportunities. So with that being said, I think there's a couple of things that have been really important and really instrumental to us having the success that we've had with raising capital. One is we are very investor focused. Every single decision we make in the portfolio, whether it's updating the website to making monthly distributions to sending out content, every single decision is made with how does this affect the investor and how does it affect their experience with us? So we really strive for that white glove experience. Secondly, we pay a lot of attention to our retention rate of investors. So I want to see investors that are really here to build a long-term relationship with us. They reinvest with us. About 80 to 90% at any given time of my investors are in 2 or more deals with me. And that's very important to me. And then, of course, I know we're doing something right when I start seeing the referrals of friends and family coming into our investor database.
That's interesting. So you just said reinvestment, and then you've launched a fund. And from what I've heard, it's more difficult to get investors into a fund to reinvest. So how are you guys overcoming that?
Yeah, so it definitely is challenging. And the thing about funds and diversified asset funds, like we have Rev Fund 1 is what we launched. It's a $100 million value add fund. The challenge that you have is there's a lot of roads that lead to Rome, and there's no necessarily clear path that's like, this is hands down the best way to do this. So you kind of have to like pick and choose what you think your investors will do. And so for us, we have investors that reinvest through the fund, but we also offer direct offerings on our assets. So it's not an either or. A lot of times it's a both. And the investors that invest into our fund or re-up, they're the ones that want diversification across their investments. They want the set it and forget it. They don't want to be picking and choosing and evaluating every deal. They're like, Veena, I know I'm going to invest X amount of dollars with you. I'm going to put it in every quarter, every 6 months, every year, whatever that is for them. And so they just continue to reinvest and increase their investments. And also when they're seeing returns and we're delivering, it's a lot easier for them to make that decision.
Now, why are you giving two options to investors? That's interesting. I mean, sometimes, you don't want to give people too many options.
Yeah, it's definitely been like an interesting dynamic. And one thing I did not at all expect was having a lot of our investors that said, oh my gosh, I love this asset, Waterstone. I want to invest into that. But I also want to be in Rev Fund because I want to have the diversification. So they are actually putting, one investment here and then another investment there. I totally did not expect that. But we gave people options because Rev Fund was really born out of demand from our investors. They wanted a way to set it, forget it, know how much they were going to invest on a yearly basis into our deals, and also be able to be diversified across multiple assets. They didn't want the risk of just any one asset.
So tell us a little bit more about what you're doing with the investors to achieve some of the goals you mentioned, the retention, the reinvestment, the referrals, the white glove treatment. What are you doing with your investors? Like, what are some of the best practices that you're following?
So the biggest tip I have for anybody trying to raise capital effectively and efficiently is, one, raise your capital when you don't have a deal on the table. So when you're in between deals is the best time for you to raise capital. I know it sounds counterintuitive because you're like, I don't have anything to pitch them, but you're not. What you're doing is you are going through who you are as sponsors, your general strategy, your business plan, making sure they understand and can vet you so that by the time you do have a deal, all they're doing is they're vetting the exact opportunity in front of them. Because, we have to raise $30 million in 42 days. I cannot go and take individual investor calls and make those calls in the course of that 42 days and still be funded. So when I don't have a deal on the table is when I start raising our capital.
So when you said you're raising $30 million in 42 days, what kind of minimums are you bringing in? What is your strategy? Because it's a lot of people. If you have a low minimum, obviously, are you raising that higher? Talk to us a little bit about the strategy to get to that kind of a level of raise going through just high net worths.
Yeah. So we have a lot of family offices and funds that invest into our deals. So they're bringing, a 7-figure check. Also, us as the sponsors, our GP team is the largest LP into our deals in general. So we take out a huge chunk before the deal even goes to the public or to our investors. So that's one. And then we also are seeing check sizes that have been gradually increasing. So our average investment is a little under 200,000 at this point. Our minimums on our deals are 50,000 in Rev Fund for Class B shares. And then any of our direct investments are general, and it's deal dependent, right? But our general minimum is about 100,000 for the Class B shares. So I just looked it up. Our average investment is about $166,390.
Wow, you pulled up the exact amount. Thank you for that. I think we're trying to inch our way up towards that. But we recently switched to 100K mins, and that's been super helpful for us to kind of target those higher numbers and hit them. We actually, we just launched one and it was done in a day, and it was, $12 million raise. So it's definitely helpful. But I'm curious. So you kind of hit the bottom of the raise with some bigger funds. Mm-hmm. Do you do anything with like 1031 exchanges? Is that a part of your plan?
We do when the business plan allows for us to do it. It's not something that we strategically target, but as an example, we're going to be exiting a deal that we've been in for less than 18 months this year. And when we exit that deal, it's going to be a significant return to investors. Like, I don't know how much just yet because we're still negotiating it, but it'll probably be like 1.7x multiplier on the equity. And so a lot of investors are going to be very happy with that return, but they're also going to want a way to defer taxes or make it more tax efficient. So in that case, we'll roll forward in a 1031, and then investors that want to stay in can stay in. And so in that way, we would utilize the 1031. In general, if someone approaches us and asks to be in a 1031 with our assets, it's a little bit tougher because the timing really has to line up. And quite honestly, unless the amount is high enough, it doesn't really make a whole lot of sense financially or administratively or legally to go through all the hoops that are required for the tick structure that you need. So we definitely do it on our own assets, but on other funds. The bar is a little bit higher for us to actually do that. And the timing has to be perfect because it has to be before we start going through the financing process.
You mentioned family funds and private equity as well. And I've heard some mixed reviews about starting to work with those kinds of investment partners as well. And kind of flaky, not committed, pulling out the last second. How have you found your experience to be, and what is your advice of getting more involved with the institutional investors?
Yeah. So we, generally speaking, like family offices, they're all relationship based. And I'll tell you, most of them at this point have found us. We don't necessarily go to find them. So I think it's a little bit different when you're the one that they're seeking out versus the other way around. So that's one. I will say that there are investors that pull out in the last minute as well. And I think it's at a minimum generally for our deals, because our deals typically get overfunded so quickly that, we go to the next person on the wait list. It's not, it's not a huge deal for us, or, we'll invest more capital into our deals if we need to. There's no issue with us doing that.
Yeah. So your advice is, you can go get in there, but don't count on them. Always be able to have a backup for them, number one. Now, you got your strategic partner hat on. You said raising capital and deal flow. You think about those things a lot. So is there anything that you want to change or achieve over the next year or so that might affect the way you guys raise capital?
As far as affecting how we raise capital, one, we have like a big focus this year on, I'm actually getting ready to rebrand and roll out with like a fresh, clean look, clean brand, clean investor experience. So that's one. Two, we are looking at adding some technology that'll make the investment process a little bit smoother. We'll make it we want to decrease friction, right? And so one of the things we do for our investors that I think has really been the white glove services. Sometimes I have investors that are, 70 or 75 years old. They don't know how to use DocuSign, or they're not comfortable with going and filling out forms. So our team will actually get on a phone call with them. We'll pre-fill everything. All they have to do is go in and click to sign so that their documents are done correctly. And, they're protected. We're protected because that's what the documents are for. So I think those are things that we're focusing on for this year. Also, I've been focusing on my social media. I don't know if you've noticed, but I hired somebody who now does all my social media, and she's been doing a phenomenal job getting content created. So, those are all things that we're looking at.
What about the top of your funnel? So what's been working for you there? To go with that, are you more inclined to do 506Cs or 506Bs with your deals?
Yeah, so we do 506C deals. We have not done a 506B offering at Vive at all. And I don't know that we will in the near future. Top of my funnel. So I'm actually like the worst person to ask about this because I do not have like this clear cut path. Like really my investors they're just repeat investors. They're loyal investors. They increase their investments with us and then they refer friends and family. So that's really how the majority of our investors are in our deals. But I think theoretically I would like to have a top of funnel. I just don't. Yeah,
you'll figure that out. You'll figure that out. You can already raise $30 million in 42 days without any kind of marketing, Veena. Can you imagine if you put a little fuel in the fire but actually building a platform? Oh my gosh.
I'm going to have to follow your lead on that because you're much better at that.
But I had this conversation with Brian Burke. I give him a hard time about this all the time. And he goes, but Michael, I don't have a problem raising money. So why should I build a platform? And I'm like, that's a good point. What problem are we solving if I can raise $100 million? It's a good point.
Exactly.
So that's pretty cool. What's your biggest challenge right now?
Oh gosh, I really have a hard time letting go of the investor touch point. Because I enjoy that part of the business. I want to talk to our investors. I want to, answer their questions, especially when they're coming in. And I know that at some point it's probably not that scalable, and I probably need to start bringing someone on board to kind of help, at least with the intake process, or streamline it a little bit, which we haven't yet. So that's probably the hardest part about what we're doing, is juggling that time. And it just has so much importance to the business that I can't move away from it yet.
All right. So that's one, letting go of the investor calls. What else?
Yeah. I think getting new technology implemented at the pace that I would like to implement it, because what I found is before I used to try to find like the one-stop shop that can do everything in the software. And I've realized that that's really not a great way to implement technology into the business, because there are some companies that are just much better at certain things than other areas of their business offerings. And so now we have kind of started finding the pieces and putting it together, but there's a lot more integration that has to happen. You know, DocuSign has to speak to the email server, which has to speak to Dropbox, and it's like all crazy. So I think that's the next hardest thing.
I mean, the thing is, I mean, you have built a substantial business. And I think the message to everyone listening and watching this is if you're in syndication, you've done your first deal, you're about to do your first deal, you are literally embarking on a multi-million-dollar business. Now, when I first got started, I did my first deal. I wasn't thinking I'm going to do a multi-million-dollar business. Like, right? It didn't even occur to me. It was like, well, let's just do a deal and see where it goes. Oh, well, let's do a second deal because the first one went okay. Oh, let's do a third deal. Like, you know, and so I don't know. It's just scared. I don't know if in your experience, but it's like, and then we do these things and then we create problems for ourselves and we solve the problems. It's like we're always in like reactive mode. And I'm curious if you could go back to your younger self. You know, what would you advise yourself and your partners that maybe you should pay attention to earlier on?
Invest into systems and processes out of the gate. Do not, try to just roll with the punches, because it's not efficient and you need that efficiency. And the more you have that process in place, the easier it's going to be to scale up.
Okay. Can you be a little more specific though? Okay. And here, so, but here's also the challenge. Okay. As you know, and we experience as well, when you're doing a live deal, right? And, you're live a deal, the entire company is busy on due diligence, contracts, insurance, raising capital. Like it's like, boom, right? It's this giant chaos. And this lasts for 2 months or whatever the case may be. And then you close the deal, you put your property manager in place and you go, whew, all right, let's build some systems. And a week later you get another deal and you never get around to it.
Okay, you're getting way more deals than I am, because I'm doing like 2 deals a year right now. I'm not getting any deal flow. Okay,
we'll talk about that. We'll talk about that next. But nevertheless, so can you be more specific about what you would have done differently? Yeah.
So in terms of systems and processes, what I mean is, like, for example, if we're talking about capital raising, right? When we have a very specific, like I have a calendar written out of on this date, day 1 of an LOI, these 5 things happen. On day 3 of an or after the LOI, this happens. As soon as the PSA is done, this happens. So I put all of those timelines in place so the whole team is operating under the same assumption. Now, of course, it changes deal to deal, because it may not be 3 weeks of due diligence, it might be 4 weeks. And so we adjust as needed per deal, but generally speaking, everyone knows what the workflow is. We also have a very specific way that we implement our documentation, for example. So that's the other thing. Our investors, they know what to expect. They're not being thrown into the middle of a new process every time we raise capital. It's the same. And I always joke and say, like, we're really boring investors. We're super vanilla because we do the same thing over and over and over and over. And that's all we do. And so our investors get comfortable with the process, and maybe we enhance it a little bit by introducing, DocuSign. We use Power Forms now to let PPMs get done faster. And we send them the links, and then they can go in and read it at their own leisure. They can forward it to whoever they need to, their attorneys, whatever. So that's like another system that we put in place that we didn't have in the beginning. And I think that those little tweaks, and it can be anything, just start setting them up right away. Don't wait until you need it, because then it's much harder to put it in retroactively, like you said.
So what kind of structure do you like on your deals? Like, you've probably done multiple structures over the years, but what have you kind of landed on? And as far as how it's set up internally?
Yeah. So generally speaking, again, we're boring. We rinse and repeat at this point. So we have our GP side, we have our LP side of the deal. And then from a return structure standpoint, we have our pref return. We typically have Class A and B shares. Our Class A shares get a slightly higher pref, no upside potential. Our Class B shares get a slightly lower pref, but they split in the equity. Usually it's, 70-30 above the split, with 70% going to LPs, 30% coming to us. And then we hurdle at whatever IRR metric that's project specific, and we get to 50-50 ultimately.
Well, let's talk about deal flow. You said you only do 1 or 2 deals a year, which of course, if it's $100 million each, is still something. Would you like to do more deals per year, or is that an issue for you, or you guys are fine with the pace you're on?
I mean, I would love to have a deal every other month or every quarter that we could put our brand and our name on. We're just very particular about what we will put on in our portfolio, mainly because we're pretty rigorous about our underwriting metrics and what we'll take on as an assumption versus what we actually can do. So we want to always under promise and over deliver, right? And so in that, with cap rates compressing the way they have been, it has been insanely competitive to get deals. And, we're losing deals not by like a couple $100,000. We're losing $70 million deals by $5 million. Yeah. So it's not a small amount by any stretch of the imagination. And honestly, we're very disciplined investors, so we just can't afford to pay $5 million more. I'd love to, but I cannot, because I will not meet our expectations conservatively.
So what are you guys doing about that? Anything, or just kind of rolling with the punches?
Yeah, we're underwriting more deals. I mean, we're patient investors. I'm not here to do a deal just for the sake of doing a deal. I'd rather do 1 or 2 great deals than do 6 okay deals.
What's the most earnest money you guys have put up for a deal? Curious.
We've put up to $2 million out of the gate, and then another $2 million after 21 days. So, I mean, right now the terms are really where we're competing.
That's right. We're seeing the same thing. It's not so much on price, but on terms, and that's pretty scary as it is. So, yeah. So what's the future look like for you guys and Vive and your company?
Well, the goal is, so I did 1 deal in 2020 and 2 in 2021. So the goal is that we get 3 done at least, if not 4. We're looking at, like I said earlier, exiting some of the deals that we're in, getting a nice healthy return to our investors, and to continue growing the portfolio. And we're actually re-strategizing and retargeting some of the markets that we've been looking at behind the scenes and trying to see if we want to bring them online for 2022.
That's cool. Yeah. So I'm curious, what does your definition of success look like now? And, maybe versus 10 years ago when life was a little different?
Oh gosh, that's a good question. So 10 years ago, I think I just wanted to get to like X amount of net worth and X amount of income. And that was like my goal for success. And I mean, I'm sure you went through this too, because I feel like anybody who has success kind of goes through this issue where it's like, okay, you achieve it. And then you're like, well, I could do this next level, or I could do this next level. And so the goalpost keeps moving. Right. And so now for me, and success has changed a lot ever since, I had kids, because now for me, success is like hoping I don't ruin my children and I don't get to find out for like 15 more years, 16 more years. Right. And so I want to set that example for them. I want to leave that legacy for them. I want them to know that, especially as women in this space, which it's very rare to see a woman in this space at this size of assets. I want them to know that they don't have to choose between a career or a family. They can do both.
Yeah, that's exactly right. Hey, Veena, how can people find out more about you, connect with you?
Yeah, so you can go to my website. I have my investor portal there. It's vivefunds.com, VIVEFUNDS.com. Or, I'm on all the social media as Veena Jetti, like TikTok and
TikTok.
All of them. I'm telling you, I hired a social media person and she does all of it for me. So I'm very grateful for that, because I hate producing content.
I love it. Well, this has been great. It's great to have you on the show here. And look forward to seeing you at some of our events coming up.
Definitely. Thank you so much for having me.